Hi, everyone. My name is Tony McLaughlin. I'm the CEO of a company called Ubix Inc. Its mission is to bring about ubiquitous acceptance of tokenized money. I'm joined today with a fantastic panel to talk about the new rails of settlement and payments. I have Ryan and Jürgen, Nadine, and Rajiv. And it's a pleasure to have you guys on the panel today. All of you guys, I guess, represent the existing rails to some extent. So you're probably in the position of trying to change the aircraft engine in mid-flight. So let's unpack that a little bit, and starting with you, Ryan, maybe a little bit more about yourself. What role do you play within Citibank, and where are you at the moment?
Yeah, absolutely. So Ryan Rugg, I head up digital assets for Citi's TTS business, but have been in and around this space for 10 years. So quite some time about, really bringing traditional finance and DeFi together, right? To create the future of networks that is always on, that is multi-currency, multi-border, multi-network, multi-asset. So 3 years ago, we launched Citi Token Service. As Tony knows, Tony was at Citi. He was at Citi with me to really move tokenized deposits around our, branches. So we're live in 5 right now that you can now move money 24/7, 365, because if I think back to my early R3 days, we were tokenizing everything under the sun, but it was missing that cash component. We always had to go back to the TradFi rails for the cash settlement. So starting with that pain point of being able to tokenize cash in I would say an always on fashion.
Yeah, fantastic. Jürgen.
Yes.
Over to you. And what is Euroclear anyway? And why do we need it?
What is Euroclear? I feel happy about the question and quite embarrassed at the same time, because what is Euroclear was a 5 years old question. I'm sure that in a room like that today, everyone should be aware. But long story short, so I'm Jürgen. I have always managed large and complex transformation projects, but I have to say that digital assets is one of a kind. So I joined Euroclear 5 years ago. I set up the practice, and we can clearly see that we're moving. I don't know why people are clapping, because, and we clearly see that we're moving now to production and scale. So that's an interesting move. And when it comes to what is Euroclear,
yeah.
Well, and I'm sure Nadine, you're going to answer later on, but we are what makes the financial system work. We are behind. We're called the post trade. We're behind most of the transaction, and because usually I'm happy with the numbers I'm going to share, but Nadine is going to double these numbers. You have to think of us as the transparent infrastructure that is always working whenever the financial system needs it. It's like the light switch. It was mentioned this morning. You turn it on. We're happy to be here. And we do that. We settle every quarter the equivalent of 1.15 quadrillion.
1.15 quadrillion.
Yeah, the world GDP. So we were used to talk about million, billion, trillion. Now we're up to quadrillion. And we have in custody close to 45 trillions of assets. So, and the core of our job is to connect assets, money, issuers, investors, all the intermediaries, and provide trust, resilience, and high value-added service to our ecosystem.
Yeah, thank you very much, Jürgen. Nadine, you had some news today, I believe.
We had a little bit of news today, yes. So all this is actually going to become real. So I'm Nadine Checkar. I run DTCC Digital Assets, and I joined DTCC a couple of years ago from a fintech. But prior to that, I've had a long history in working in banking. So I do represent, hopefully, the old and the new together, back to the old in a certain way. So it's back to the future. But so how many of you have ever heard of DTCC? I know nobody's heard of Euroclear. All right, we're doing okay here. But no, we partner with Euroclear, actually with everybody on this panel, to manage the post-trade side, which is really where most of the pain exists within traditional financial infrastructure. And I'm sure Tony later on is going to ask me to try to talk a little bit about where all the pain is. And I have been trying to count the ways, and there's a lot of them. But hopefully tokenization will solve some of that. But to share some numbers with you, we custody about $115 trillion. So we're the only post-trade service in the United States. We handle about 1.4 million QSIPs and $4 quadrillion in settlement. So we are by large.
Hold on a second. We were like, let's just get these comparisons here. So your number.
There's a little rivalry here.
It's fine. The US is always bigger and better, so we're happy with that.
And we're in Florida, not even in Texas. So yes, you're right. How many extra points for how many zeros are in the quadrillion? I mean, the numbers are really impressive. And if you saw this morning, so in December, we actually were granted by the SEC a no action letter, which really propagated our ability to move forward and tokenize the US markets. And as Jürgen said, they're the largest markets that are out there. And this morning, we announced that on July 13th, we will start with the first tokenization of US assets officially from the depository. And we're calling it a soft launch to really help the industry get ready for the big launch that will occur in October. So this is no longer a pipe dream. This is no longer talking about proof of concepts. We are ready to go. And with the pipes that Ryan is building, and I know if you're going to talk about the risk side of things, we're ready to go, guys. So this is happening, and slowly but surely, the U.S. market is coming on rails, on blockchain, and we're going to tokenize and manage our future. So that's what we're doing.
Great introduction. And Rajiv, tell us a bit more about yourself. What's your role, and what role will Moody's play in this new world of tokenized assets?
Sure, it's difficult to beat that introduction, right? So I'll try. I'm Rajiv Bamra from Moody's Ratings. We evaluate credit risk for a living and increasingly trying to understand digital asset infrastructure besides the balance sheets and the PDF files that we evaluate today. And my role and my mandate is simple. Not to prove that the technology is impressive, but actually identify and educate people on the underlying digital asset risks and make sure that they are understood. At Moody's Ratings, just what Nareen said, we are also trying to make sure that a proof of concepts actually move beyond just pilots and into production. So we did launch our own token integration engine, which is network agnostic. And we are the first credit rating agency to have a node infrastructure, being able to ingest information and then send our credit insights back onto the blockchain of insurer's choice. We also published industry first stablecoin rating methodology. Happy to talk about why a credit rating methodology is needed for stablecoins when there are so many other risk scores available out there and easily accessible. And also we've been trying to understand how do we go beyond from the traditional assets that we assess and evaluate. And an example, latest example being a Bitcoin-backed structured product, which we actually rated and assessed using our existing credit rating methodologies. So we are in the process of refining, we are in the process of innovating, and we are in the process of pushing the envelope beyond POCs and pilots like the rest of the co-panelists just mentioned.
So what I'm hearing, reading between the lines, is that traditional finance has received the message that the future is tokenized. Is that generally what we're doing? We're on the train, we're moving towards tokenization of all financial instruments, as one of the previous panelists talked about. Is that where we're heading?
We got the memo, yeah.
We got the memo, we're acting upon it,
We're
resources are being
forward.
allocated. I mean, Ryan, when it comes to Citibank, one of the great things about Citibank, I'll plug it as an alumni, is branches all around the world plugged into all these different value transfer mechanisms, moving, what is it, $4 or $5 trillion a day. So what's the driver for tokenization for Citi? Is it client led? Is it fear of what JP Morgan is doing? What's the impetus?
Yeah, it's definitely client-led, as you know. And we view that digital assets and RWAs are just another tool in the toolkit if our clients want to use them. And we're making sure that they're backwards compatible and they're interoperable. And what do I mean by that? That if you have your traditional cash and you have your tokenized deposits that can fix the gap of weekends and holidays, but you're able to have the fungibility between both instantaneously, right? So if you want to move money from New York to Singapore, we move in under a minute and then deposit cash back in your account, because our large corporates, until we're in a world that tokens are able to use for everyday life, they still have to go back to fiat. They still have to go back to cash for payroll and taxes and supply chains. So it's really important to be able to have that fungibility between our traditional rails as well as digital asset rails, but to make it seamless for our clients. Like if we think about the large multinationals and corporates that we serve, they've had these treasury ERP systems, as you know, for decades. Yeah. It's hard for them to even put in a new currency in, let alone a token, right? And they're still on batch settlement. They're not real time. So what we've tried to do is obfuscate the complexity of digital assets and blockchains as much as possible. Clients don't have to open new accounts. They don't have to have wallets. They don't have to manage keys. They just actually get the underlying utility of being able to move money, as you mentioned, kind of across the globe. We're live in 5+ branches with new branches coming on. We're adding additional currencies. We now have USD and Euro, and everything that we do is based on client demand. We launched, early days and early adopter program that helped feed our roadmap. That's why we added Euro in Q1, because it was based on our European client demand. That's why we added, Dublin as a branch. We've targeted our largest money hubs that have the biggest impact on our clients.
So then, are you saying that the clients really don't care that much about the underlying technology? They just care about what's in it for them? They only care about the functional difference that they get from you using the rails on the background?
It's like the analogy, do our clients care if they're on-prem or in cloud, or do they want just the, programmability? Do they care if they're in data centers or in servers? No. I think that we'll be successful if clients don't even actually know that they're using a blockchain. And the way that we've orchestrated at Citi is it's a drop-down box that says Citi Token Service in the UI called Citi Direct that you log on to. Other than that, you don't have to manage the complexity of the blockchain. It's just about moving money 24/7, 365. And the vision is having that multi-network, multi-asset, multi-currency, frictionless system.
Okay, so the clients, in your experience, don't want to manage a wallet themselves, so you let the bank manage the wallet?
Currently, where most of our large multinationals are right now in their journey, like as mentioned, they can't even real time. I've had a client that moved money, their batch ran at 5 o'clock, they moved money at 6. They're like, the money's not there, it's not in my end of day report. I'm like, did you log on to your bank account? It's there, right? So I think the complexity of the technology right now, and it's about meeting our clients where they are in their journey.
Got it. Jürgen, Euroclear, still not clear exactly what it is. I think it's just something, I think it's a smaller version of DTCC. Is that what we're getting?
So
your
I
clients,
object.
do your clients care about the technology? And if not, what are the benefits that you are seeking to deliver through the application of blockchain?
So Tony, we know each other a little bit. So first of all, I'd love to answer the memo question.
Okay.
Because the way a memo works, it goes both ways.
Yeah.
So we got a memo a few years ago from the crypto native industry telling us, we're going to disrupt you.
Yeah.
That was the headline of the memo. And it's a bit difficult message, and especially when it's not working. And so the second memo we got was, we want to converge.
Yeah.
And that's already allowed us to write much more and to collaborate more. And the third memo is, it's about partnership now, and it's about scale. And that's a memo everyone needs to understand, because
That's right.
you have here 160 trillion of assets under custody, and crypto industry is unfortunately only 2-3 trillion these days. And I think, if you look at only our business of assets under custody over the last 4 or 5 years, it has grown by more than 5 trillion. So I think, the memo is about this convergence, and it's not about the DeFi or TradFi. I work in finance. My clients care about assets and cash, and how this can flow in a seamless way. You described very well the frictionless world we're trying to build, and that's exactly it. So at the level of our industry, we're not trying to just digitize processes. We are collaboratively working on reshaping the way the capital market works. Because, and I hate to use this word innovation, especially when it comes to digital assets, we need to make the translation between what it means to something that is actually, first of all, makes sense for our overall client base, that is scalable and usable, because our clients happens to be the largest financial institution in the world. And that's our responsibility to bring that forward. So long story short, we receive very few questions about our traditional tech and a lot about the new tech. And I think one of the beauty we have seen over the last few years, has been somehow a very tech-driven conversation, and now it's a business-driven conversation. I think we have done collectively a big part of the job. We shouldn't be asked too much to compromise because of the tech capabilities today. We should be able to say, this is what our clients want. This is what our regulation requires. This is actually what it takes to settle a few quadrillions a month collectively.
Yeah.
And volumes, regulation, technology maturity, and client demand and client value has to come together.
So Jürgen, let me ask you about one of the other memos that got sent. There was a memo that got sent called trustlessness. Where did that memo end up?
So, interestingly, blockchain was created to disrupt trust, transfer value in a trustless environment. And hopefully you'll be able to build on that as well, saying that we are brought back in the game because we provide this trust. There's a reason why you still have millions and billions on-chain only, because the trust component comes at a cost. And because of what we have built over the decades, has shown to the market that whatever happened, we were created like 60 years ago. And look at all the innovation that happened and all the crises. Guess what? We have always been at a meeting point and able to support the growth of the capital market. And that doesn't happen just with fixes and patches. It happened because we have the ability to transform ourselves deeply from the inside. And so we are doing that currently for what's coming next. And that comes a lot with the trust as well. And talking to the work that we have been doing on the digital asset securities control principle, it gives a framework that builds on trust about the regulation, the legal compliance, the asset safekeeping, and everything that our clients expect from us.
Right. So there's no escaping counterparty risk when it comes to financial markets.
Trust is an asset that has a lot of value, and we're banking on it.
Yeah, great. Anything, can you expand a bit more about, again, your announcement today, where it leads to? I think you said there was an initial stage and then a follow-on stage, but you really, is everything in DTC going to have a digital twin? Is that the way you think about it? Are they going to be able to trade either in digital format or in traditional format? What's the...
That's correct. So think about it as it's a 3-layer cake, for lack of a better term, right? So first of all, it starts with an aggregation of various L1s and L2s, Hedera and others that are out there, EVM, non-EVM, what have you. Again, they'll be driven by client demands, and what DTCC will do is We're not using bridges. We build an orchestration layer around that. So think about it as shared infrastructure. And that's the beauty of blockchain, is that you can have shared infrastructure, and we're starting with that component. The second layer there is a tokenization service where any DTCC participant can give us instructions to convert from the legacy format to digital format, and going back and forth. Now, the beauty of this, yes, we are using a digital twin, mainly because these are existing assets, so we can't natively issue them. But also, we're going to go through a period of time where we need to make sure that investors can tap where the liquidity is. So if there's liquidity on the traditional side, they can go there. If there's liquidity on the digital side, so we can flip-flop wherever. We'll put them in the wallets, and then from there, as long as DTCC recognizes the wallets, these wallets can be used anywhere, in TradFi, DeFi, 24/7, interacting with each other. So that's the second layer. And the third layer is, I often, so fine, we've tokenized 115 trillion, and the question is, so what?
Yeah.
Right? So if there's no value to these tokens, so we are building a coalition of the willing, for lack of a better term. So it's a Web3 ecosystem where I'm sure a lot of you and your firms are part of these conversations. And then DTCC tried to deal with the biggest pain point and probably the biggest use case that we can see in the market today is collateral. Right. So what we've done is build a collateral app chain, because we believe a lot of the pain points, whether it's digital or not, still relate to the data. Right. So it's that fragmentation of data. It is the inconsistencies of data. I'm setting you up here, so you'll be able to take it from there. But what we've been able to do is you'll be able to take your DTCC tokens or non-DTCC tokens, and then be able to create shared pools of wallet that you can move your collateral anytime, anywhere that you would like. Want to be clear, we're not doing collateral management. We're just providing that shared infrastructure to do so.
So then I guess the thesis is that once you've got the same group of assets and traditional books and records, and the same group of assets on digital representations as tokens on chains, that over time, the tokens have more functionality than the traditional books and records.
What would you tell a man who can scroll for hours but can't work for 10 minutes and hates himself for it every night?
Well, it's a little bit of both, right? So we will be uniquely positioned to show any investor their combined balance in both legacy and digital, right? And that's really, really important, because we know not everything is going to tokenize, and we also know it's not going to tokenize at the same time. So you still need to work in the old and the new, and still apply the same level of care and risk management to these assets. It doesn't matter what form they're in, right? We're still stewards of these assets and need to do that. But we are setting up new books, digital books and records for DTCC. We'll be able to track the ownership change of that token in quasi-near time. Right? There's always a lag, because I can't control how quickly the consensus on any chain occurs. But we'll be able to track that ownership. We won't know who it belongs to, but we know it's a good token, not a forged token, or not like a nefarious country coming in and doing bad things, right? With that. So we're pushing through on that sense, and we believe hopefully that should open up the tokenization, and anybody that wants to execute on their digital strategy, there should be no more excuses, right? You've got the largest depositor in the world that's making those assets available to whomever needs them. And then you've got tokenized deposits, you've got stable coins, you've got tokenized money market funds. All those can be used now to initiate a DVP process and push forward. So we're hoping not only are we trying to fix and try to provide a shared infrastructure, but also working with pretty much everybody in this room plus more to create value for these tokens, because with no value, what's the point?
Yeah. So Rajiv, turning to you, I guess the digital token of an existing instrument isn't rated anything differently from the traditional representation. So what's novel in your space when it comes to tokenization of financial instruments?
Yes, great question. But before I answer that, I wanted to go even beyond what Jürgen said. The entire narrative started from disintermediation, then changed to disruption. Now we are talking about convergence, right? So the market has evolved, and we are at a place where we can now start seeing the nuances and the differences and the novelties that digitalization brings with the assets. To Nadine's point, I would like to also add, we believe that the operational and cost efficiency will come when the assets actually become more natively digital than digital twins themselves. So there is that nuance that in our research also, we found that the efficiencies are far better in a native asset than a digital twin aspect. To answer your question, we assess the credit as credit, irrespective of whether it's a tokenized digital version or it's a conventional version. But with the technical wrapper, we have to then start evaluating new counterparty risks that may evolve because of the usage of smart contracts. Now there is a decentralized custodian that's now becoming part of the value chain. The entire legal structure or framework hasn't been tested at scale. So we need to evaluate and make sure that legal frameworks exist. Because if there is, let's say, ever a hack of a smart contract, we don't know who's going to be liable. Is it the developer? Is it the validator? Is it the blockchain provider or the issuer? That's not quite clear yet. So if you go to a code, who is going to be liable to pay the holder or the investor in full, should there be a default of the asset?
And that answers your trustless question, right?
Yeah.
You still need a throat to choke.
Yes.
Right? Because we're not dealing with retail money here. We're managing money on behalf of others, right? You still need a fiduciary somewhere in that chain.
But we've stumbled on something novel because, and again, please feel free to push back, but in the case of when you're using a blockchain, especially a public blockchain, there are things that can happen on that infrastructure that are not in control of the users. So those are novel risks that you might not get if you fully own the infrastructure.
That's a good point. That was going to be my following point, that liquidity sits on permissionless public chains. We all know that, and that's the end. That's the destination to get onto public chains. But permission private chains are not going anywhere because accountability, trust sits there. And institutions need that walled gardens, so to say. And the previous panel I was hearing backstage called it invisibility layer. And that's going to be how the ecosystem is going to work, with a layered structure and architecture where compliance, identity, verification, accountability, the trust, the credibility will all sit in that permissionless, and then the required public information will be shared on permissionless chains to democratize the investment or reach out to more retail investors than just institutional. So that's the aspect there. From a risk perspective, an analogy that I generally use is, consider we are driving on a highway full of traffic and physical speed bumps. There's a lot of friction. That's our traditional rails. We know there is friction. We've already priced that risk into our models. We know how to deal with it because of the decades of data that we have and collected. Now, if that highway is if those speed bumps are now paved and the highway is really smooth, if you are driving at 200 miles an hour and you hit a pothole, there's a catastrophic accident which needs to be understood and mitigated beforehand. And that's where the control, the governance, and the credibility and trust comes into play. In the first half, where there are speed bumps, we know insurance will kick in if there is some default. An institution will make sure there are other ways of paying the investor in full should an asset default. There are other mitigants around that, but in the more permissionless, decentralized ecosystem that hasn't been tested at scale, which is where the lot of risk lies. So the risk is actually between the lag of that friction and not really the rails. The rails are doing the job. The technology is tested. We know it has benefits. It's just how do you now make sure those benefits work in your favor to fill those gaps that are known in the traditional world.
Yeah.
I know Nadine doesn't want to use the word plumbing, but that's
No plumbing.
No plumbing, only real.
No plumbing.
But I'm hearing that there are, for these benefits of blockchain, there are some novel risks that we have to be aware of. And you know what, we've got like a minute and a half left. I'd like us in this next minute and a half to solve interoperability once and for all. Can we do that? So Ryan, how do we solve for interoperability? Because we've been in this situation where lots of firms are doing their own things. How do we make the financial system truly interconnected?
So this has been the million-dollar question since I've entered this space, interoperability. And from a city's perspective, it's broad. It's not just interoperability with other blockchains. And first off, we wouldn't have built City Token Service on a blockchain if we just want to stay within City's four walls, right? We always had intention of going externally. That's why we are on a private permission version of Ethereum, EVM compatible, that we have that ability if and when legislation and regulation and safety and soundness are in these public networks, we're able to do that. But it's also important to have interoperability with traditional assets, like we're talking about here, where if you want to be in the traditional form or in the digital form, you have that fungibility and optionality to go back and forth. A tokenized money market fund for collateral management that now you can earn interest hourly and there's no that. So I think the word interoperability gets thrown around a lot, and it's extremely important, but it's not just with public blockchains, private permission blockchain, it's also with the traditional. And I think that's what we're all kind of pulling through up here. That's really important.
Well, I would have loved to have solved the interoperability problem.
We have a way.
There's
Aquaman, what's going on, brother? Are you good to go?
What is good? Yo, your microphone kind of sounds a little different right now, though, bro.
Give me a second.
Yeah. It doesn't sound like it's coming directly from your mic.
Did that fix the problem?
Oh, yeah. Way better, bro. Way
Much better.
Yeah.
Cool. Yo, what the heck? I just found out, this just ruined half our presentation today, bro. Holy crap. So check this out. Crazy work here, dude. They're scrubbing stuff from the internet for sure. So this Bermuda SALT conference that took place, the live stream Bermuda Digital Finance Forum conference that took place.
Yeah.
Bro, they scrubbed this from the internet. They took this shit down. Look at this. It doesn't exist on YouTube anymore.
Oh, wow.
Good thing I posted a little tiny clip of Sandy Call speaking at this conference. But bro, I had literally, look at my notebook. I had literally like 10 video clips. There was a dude in here that said that trillions of dollars are about to come on chain in the next 12 to 18 months. There was a video in here where a guy from the DTCC said the entire world is changing, and if banks don't adopt crypto, they're going to get left behind. Bro, I had all these notes, but they literally took this video off of YouTube.
Damn, they were like, we said too much. We got to take that shit down.
So it's so crazy that they scrubbed that. So anyways, I'll jump to the second part of the presentation, and then eventually once we get to the soil platform, you know, if you don't mind giving everybody a bit of a taste of what just launched once we get to that. But I want to talk about Canton first. And the reason why I want to talk about Canton is because you have two industry-leading experts on stage that sit as super validators on the Canton network, and they are both systemically important organizations. So the first dude here opened up his introduction by stating that, and this is the gentleman from Euroclear, that they process the world's GDP. All right, so just listen to what he says, and remember that this guy, you know, and Euroclear are partnered with Canton Network. Let's see if I can find that clip.
Fantastic. Jürgen,
Yes.
over to you. And what is Euroclear anyway? And why do we need it?
What is your theory?
You know, I feel happy about the question and quite embarrassed at the same time, because what is Euroclear was a 5 years old question. I'm sure that, you know, in a room like that today, everyone should be aware. But long story short, so I'm Jürgen. I have always managed large and complex transformation projects. I have to say that digital assets is one of a kind. So I joined Euroclear 5 years ago. I set up the practice, and we can clearly see that we're moving. I don't know why people are clapping, because, and we clearly see that we're moving now to production and scale. So that's an interesting move. And when it comes to what is Euroclear,
Yeah.
well, and I'm sure Nadine, you're going to answer later on, but we are what makes the financial system work. We are behind. We're called the post trade. We're behind most of the transaction, and because usually I'm happy with the numbers I'm going to share, but Nadine is going to double these numbers. You have to think of us as the transparent infrastructure that is always working whenever the financial system needs it. It's like the light switch. It was mentioned this morning. You turn it on. We're happy to be here. And we do that. We settle every quarter the equivalent on 1.15 quadrillion.
1.15 quadrillion.
quadrillion. Yeah, the world GDP. So we were used to talk about million, billion, trillion. Now we're up to quadrillion. And we have in custody close to 45 trillions of assets. So, and the core of our job is to connect.
So I just wanted to play that real fast and remind everybody that back in 2025, February, Digital Asset and Euroclear started the first project phase to increase the mobility of collateral. That key word right there is going to be very important, of assets through the Canton network. And this gentleman just said that they process the entire world's mother truck and GDP. Like,
Yeah, that's massive. Quadrillions too, bro. Jesus.
So back to this Hederathon conference, you have the representative from the DTCC, Nadine, and listen to what she says here, bro. She says, "We are ready to go."
How many zeros are in the quadrillion? I mean, the numbers are really impressive. And if you saw this morning, so in December, we actually were granted by the SEC a no action letter, which really propagated our ability to move forward and tokenize US markets. And as Jürgen said, they're the largest markets that are out there. And this morning, we announced that in July, actually on July 13th, we will start with the first tokenization of US assets officially from the depository. And we're calling it a soft launch to really help the industry get ready for the big launch that will occur in October. So this is no longer a pipe dream. This is no longer talking about proof of concepts. We are ready to go. And with the pipes that Ryan is building, and I know if you're going to talk about the risk side of things, we're ready to go, guys. So this is happening. And slowly but surely, the US market is coming on rails, on blockchain, and we're going to tokenize and manage our future. So that's what we're doing.
Great introduction. And Rajiv, tell it.
Right, we're ready to go.
And she said the big launch in October.
She did. And the best part about that is, I'm glad that you picked up on that. Now listen to what she says about how collateral is the biggest use case. And she also mentioned another keyword that we're going to use today, quadrillions. Okay, so now listen to how she says collateral is the biggest use case. Check this out, which we know. What did the Euroclear do last year for the first time ever on Canton Network? Launch a collateral project. Okay, listen to what she says here.
So that's the second layer. And the third layer is, I often, so fine, we've tokenized 115 trillion. And the question is, so what?
Yeah.
Right. So if there's no value to these tokens, so we are building the coalition of the willing, for lack of a better term. So it's a Web3 ecosystem where I'm sure a lot of you and your firms are part of these conversations. And then DTCC tried to deal with the biggest pain point and probably the biggest use case that we can see in the market today is collateral. Right. So what we've done is build a collateral app chain because we believe a lot of the pain points, whether it's digital or not, still relate to the data. Right. So it's that fragmentation of data. It is the inconsistencies of data. I'm setting you up here, so you'll be able to take it from there. But what we've been able to do is you'll be able to take your DTCC tokens or non-DTCC tokens, and then be able to create shared pools of wallet that you can move your collateral anytime, anywhere that you would like. Want to be clear, we're not doing collateral management. We're just providing that shared infrastructure to do so.
So then I guess.
Okay, so collateral is the biggest use case. All right, so now check this out. Let's look at what happened this week alone. So you go over to the Canton Network Twitter profile, and it says right here, Societe Generale joined Canton as a super validator, bringing tokenized collateral on-chain repo financing and regulated stablecoin settlement, USD Euro convertible from SG Forge, and it will now power digital settlements across collateral mobility and cash management on Canton. So again, that collateral use case, another huge institution pairing with Canton for that collateral use case, which again, the DTCC just confirmed is the biggest use case. Then you've all here said, I'll say it again, collateral movement on chain is probably one of the best use cases for public blockchains, mirroring what the DTCC representative just said. Okay. Super excited that Societe Generale is joining Canton Network to become an SV and be the first to enable Prime on chain. Big milestone. Then you come over here. Remember that the DTCC said quadrillions. This industry needs new goals. And he reposted Caroline D. Pham's post here with the quadrillions mentioned in the background. And then, hold on, it gets crazier. He said here, utility will eventually win Canton Coin. And right underneath of it, he liked this post that I put where I said, I feel like when the day comes, people are going to be blown away by some of the valuations we will see, considering we have never in the 17 years of crypto seen a utility super cycle. And he liked this post. As we continue to progress, he said this week also, May 12th, it wasn't for no reason that we titled our podcast Quadrillions. Crypto numbers are widely disconnected from where real markets sit. Repo alone processes $13 trillion daily. And I believe that Canton Network will soon do close to 10% of that daily volume, bringing real utility to Canton Coin. Y'all, just do the math. I'm not even going to speculate. Do the math of what 10% of $13 trillion is daily.
Isn't that 1.3?
Bro, just hold on. It gets crazier. So then, look, check this out. Remember that you pointed out just now that Nadine from the DTCC said that they're about to go live and they're ready to go in October. Like, that's it. May 4th, you've all posted this. Finding enough use cases that can drive natural activity on chain is the holy grail for any network without relying on speculation. That is why this project is so important. Very excited to see it go live. I repeat, go live on Canton Network later this year. And he posted this a DTCC announcement where all the Ripple and Ondo maxis tried to assume that this has anything to do with the XRPL or Ondo, when in reality, it's going live on Canton. It's going live on Canton. Regardless of what you want to believe or the speculation that you want to participate in, this is going live on Canton Network, right? So with that being said, what was just announced, look at this, May 14th, the DTCC's tokenization service enters production in July with full launch in October from the Canton Network. And Intellect EU's onboarding package covers node operations, custody integration, and custom development for institutions joining the networking group on Canton. And so what did EU Intellect just launch? It says right here. Intellect EU's end-to-end offering covers node operations, wallet and custody integration, custom development, and tokenomics advisory for the participants joining the DTCC's tokenization service ahead of its October 2026 launch. Intellect EU, a premier member of the Canton Foundation and a long-standing fintech integrator, announced its end-to-end offering covering node operations, wallet and custody integration, custom development, and tokenomics advisory for institutions participating in this working group. The offering positions Intellect EU as a one-stop partner for working group participants joining Canton, consolidating what would otherwise require multiple specialized vendor relationships. Through a single engagement, working group participants gain access to institutional-grade Canton node operations, covering validator and supervalidator roles on the global synchronizer, a connectivity layer between Canton and the institution's chosen wallet and custody providers, custom DOML and Canton application development, integration with existing back office and legacy systems. I repeat, integration with existing and back office legacy systems. An active advisory on the Canton Foundation governance, tokenomics, and ecosystem positioning, all offering carry institutional SLAs, uptime guarantees, monitoring, and the highest industry standards for deliverables. Then down here it says the DTCC's move towards production manifests tokenization as a new core pillar of the financial market infrastructure, said Hanna Zubko, CEO and co-founder of Intellect EU. For institutions, the challenge is no longer just getting on-chain, but the complex reality of operational readiness, orchestrating node infrastructure, custody, and legacy system integration without compromising security or regulatory compliance. Intellect EU's role is to bridge this gap. Our comprehensive onboarding model strips away the technical friction, allowing participants to prioritize business growth over infrastructure hurdles. Our goal is to ensure that DTCC participants don't just connect the tokenization services on the Canton network, but that they gain competitive edges to define the future of the industry. So this is, again, more confirmation that this is happening on the Canton network. Now, what I find interesting about this is this says nothing about Stellar, but if you come over here and you come to the Intellect EU's website and you click on these resources where it says client success stories, data intelligence, you click on Catalyx right here. It'll take you over to this page. It says right here, the blockchain manager. Catalyx Blockchain Manager is the leading infrastructure management platform on the Canton network, enabling organizations of any size to easily deploy and operate their infrastructure. Then, if you read thoroughly through it, you scroll down, it says right here, the infrastructure layer for institutional blockchain. It does mention Stellar right here, Hyperledger Fabric, Hyperledger Besu, but then right here, Canton network, right? So this platform from Intellect EU Catalyx will enable institutions to seamlessly integrate Canton network into their back-end infrastructure. This is huge.
Yeah, you can't fade this, bro. You can't fade this at all. This is massive. This is super massive. Like Canton, in my opinion, now is definitely a winner, bro. Like this is, they're spelling it out for us. Like this can't get any more transparent. They're using Canton, bro.
I'm not saying that they're not going to use any other networks or blockchains because they most likely are, but the way that it's set up right now, it's looking like Canton is about to be the first one.
Yeah.
You know.
Yeah. Yeah, I definitely agree with you, bro. I feel like Canton is about to do some ridiculous numbers. Like, just my own opinion. Like, I feel like it's going to do some ridiculous numbers once all this comes to fruition. And it's going to be crazy because, like, everyone could have hopped on board, too. I feel like everyone could have figured this shit out. But everyone is so distracted by so many other things that are going on in the space. And I feel like we're so far along, too. It's like, fuck, you know, some of these projects, they don't get the attention that they should.
I feel like a lot of people are distracted from the plans and promises of other networks that have been disclosed by retail hype over the last, let's just say, 5 to 10 years of everybody saying year after year after year, oh, this network and this chain is going to be chosen for the utility cycle. The utility cycle hasn't even happened yet. So everybody's married these biases to these networks and these chains that had some hype and momentum behind them, but in reality, the institutions aren't actually choosing those chains and those networks, and they're choosing other ones. And because people have married this bias to this other chain and become tribal, they're having a hard time coping with what's actually happening behind the scenes.
Yeah. Yeah, bro. 100% well said, bro.
You know, which is why diversification is key at the end of the day, because who knows who's going to be right or wrong. That leads me over here onto XRP today. We have some huge XRP announcements. I was going to play some video clips from this Bermuda digital finance forum that took place, where they announced that the entire government infrastructure of Bermuda is going to launch on the Stellar blockchain, which is huge. Yeah, you didn't hear that, did you?
No,
Let me
this is new news to me.
let me see if I got a video clip of that, because I think I did before they took this video down. Yeah, I sure did. Thank God. I think I did. Hold on, let me find it. Yeah, here it is right here. This is the video that they took, or this is a portion of the video that they took down.
Has certainly been doing the serious work deploying blockchain infrastructure in sovereign context for years. This is the first time that we have Stellar, and I'm grateful that you are sponsoring the Digital Finance Forum. Tell us what is important to Stellar Development Foundation and why Bermuda and why now?
Yeah. So for those of you who don't know, Stellar is a network that was purpose-built for regulated finance. And I think we have been really focusing on this over the course of the last 12 years. The design of the network was really focusing on being able to first make sure that you can transmit a payment anywhere in the world at as low cost as possible, while making sure that we built in all the right features into the set to make institutional issuers and others very, very comfortable with the network. That goes from things like asset tokenization features, the ability to freeze, claw back, all of these things on the network that really make it super viable and valuable, particularly as we start engaging with institutions, but also regulators across the board. And so what I think has been really powerful is, that has allowed us to be the first in a lot of different things that have, I think, a lot of relation. We're the first network to work on deploying a universal basic income solution, which we did in the Marshall Islands. We were the first blockchain to work with the first regulated money market fund through our friends here at Franklin Templeton on Stellar as well. We've worked with the German government. We've worked with the United Nations. We've worked with the World Bank on deploying a lot of different payment structures that required all of that. And so that's really been the key. But what's so fascinating to me about Bermuda, and really just a tremendous job to you and everyone here, is this is where I see the convergence of the technology, the regulation, and the politics, which makes this just a phenomenal place to start thinking about what's next as it relates to digital finance. So again, we are so excited to be here with you.
Yeah, so they literally announced that Bermuda will begin moving key payment financial services activity on chain onto the Stellar network. So that was announced this past week. And they took this, I don't know why they scrubbed this video from the internet. You can see the link here inside the CyberX. Let me go back. You can see the link here inside the CyberX Discord. This is that video. But when you click on it and you go to YouTube, they took it down. So I'm happy that I was able to pull some clips from it before they took it down. I wanted to play so many more clips from it today, but yeah, unfortunate fate for this video, which leads me over here. So Sandy Call said this, that we are literally building peer-to-peer networks that will allow each and every single individual to do things that only the most sophisticated institutions have traditionally been able to do. And this will jump into our yield conversation today. Aqua, take a second and listen to what she says here. I want to hear your take on it.
Access ever since. And to me, these technologies represent the ultimate expression of that. We are literally building peer-to-peer networks that allow every one of you in this room to do things that only the most sophisticated institutions have traditionally been able to do with their portfolios. And to me, this is the excitement and the promise of this space. I agree with all the points that Anthony made about why this opens up asset management in a new way. But what it also opens up is this idea that I should get the utility from every asset that I own, that I should be able to use every asset that I own to earn more, to get more yield, to earn fees, right? Every asset I own should work for me. And I think that these technologies are what is creating that opportunity. And we saw this when we launched the access ever since. And to me,
Bro, I'm not trying to toot our own horn, but over 2 years now, we have been saying this and preaching this in so many different ways. And here we are, Sandy Call on stage, saying exactly what we've been saying very loudly on X and on YouTube, again, for over the past 2 years now. Like, this is amazing to be aligned with this message that she just delivered on stage, bro.
I told everybody that one day yield is going to be the new sexy. You know, it's not going to be a laughing matter anymore. It's going to be, if you're not earning yield, you're not competing properly. If you know, these bullish moon boys that are on the internet, the ones that throw out the $1,000 XRP price predictions of the 4-digit blah 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 blah, they're honestly just misleading the masses as to the digital wealth that you could really accomplish if you understand collateral and you understand how to lend and how to borrow and how to keep your wealth. Like, honest to God, anybody that thinks they're going to survive selling their digital assets in the future for fiat currency, you know, you gotta really start to pay attention to who you're listening to, because when you know, say for example, XRP does go to, you know, whatever, some high valuation that most people think it's going to go to, and then you sell it for fiat, and then let's say it keeps going up, you're screwed. Like, you're so screwed. You're going to get stuck back in the traditional financial system that's going to absolute crap, and you know, you're gonna miss maintaining and growing your generational wealth because you were, you know, manipulated for so many years to believe that you had to sell a utility asset like XRP for fiat to survive, when you don't. When in reality now we're seeing platforms where we can lend out our XRP, earn yield on it, borrow against it, and loop yield strategies to earn passive income and possibly even retire off of our passive income if you have enough digital assets like XRP or XLM or HBAR or many others that are now seeing lending and borrowing capabilities. This was just announced from Upshift. Now, I'm not in support of any of these platforms. Always do your own, you know, personal risk assessment and understand that there is risk involved in these yield strategies. It is still early days. And in some of these yield strategies, we are not in the Wealth 28 Club participating outside of some test amounts until regulatory clarity is fully implemented. But nonetheless, it's just great to see these things starting to develop. So Upshift announced this today. MXRPY Vault is now open for deposits, and it looks like this is going to start to compete with some compete with some of the yield that Soil just launched, bro, because it says right here that they're aiming in this vault for around 4% yield on XRP.
And that's what is that XRP5? So is it like a wrapped version that it's
Yeah, I
going to be
believe
then?
it's I
Okay.
believe it's the wrapped. It's like the whatever they have going on with Flare and their entire like wrapped version of XRP or whatever it is.
Yeah.
But
Yeah.
still, you know, nonetheless, it's good to see, you know, a mid-range single-digit yield on XRP, because that outcompetes a lot of other yield-bearing platforms that have launched for XRP as of recent.
Yeah. I
But
feel
the
like
more,
that's going to go ahead.
good. No, you good.
I was just going to say, I feel like that's going to be a conversation, pardon, in the future with XRP holders, as far as like, hey, I'm in a vault natively on the XRPL, and it's like, oh, I'm in this other vault, you know, with this bridge, and it's wrapped, so I got XRP Fi in this vault, you know, because the native vaults were all filled up. I definitely feel like that's going to be a conversation in the future amongst holders and just new crypto topics to talk about and shit. Because these vaults are gonna fill up. These, like, they have caps. Like, it's not like fucking unlimited,
Yeah.
you know?
I think everybody, and again, not financial advice, this is just kind of what I'm doing personally with my mentality around my digital assets, is I'm starting to not only diversify amongst the digital assets that I hold, but within my digital asset holdings, take XRP, for example, I have my long-term bags that will sit in cold storage that I will never touch. That's like my safety bag. Let's just use an example. It's say 50,000 XRP. It's 50,000 XRP that will never reach cold storage. It's tucked away. It'll never see the day of light. And it's just my oh shit bag in case something happens and a platform goes down or a DeFi protocol goes bust or something. It's just my fallback bag. I don't day trade it. I don't swing trade it. It's just sitting there with an LLC and a freaking trust attached to it for my kids when, you know, I disappear. It's never touched. But then I'll also as of recent, I've been accumulating more XRP that I'm going to specifically be utilizing for lending and borrowing, that I'm utilizing on the Metallicus ecosystem. So every single time, every single week, I put 100, 200, 300, 400, whatever amount of dollars into XRP and lend it out on the Metallicus ecosystem, which is a BSA compliant DeFi protocol, earning yield. Even though it's a small sliver of around 4 or 0.4 to 0.6% yield, it's still there, it's earning, it's accumulating rewards. And with those rewards, every single day, I can take those rewards, compound them. But then also, I'm now accumulating XRP for vault strategies, right? So I'm not only diversified in my crypto portfolio, but I'm also diversified in my asset specific assets as well. So I have XRP that I'm day trading. I have XRP that I'm bag holding. I have XRP that I'm lending and borrowing with. And then I have XRP now that I'm going to accumulate for vault strategies. So, really start to consider, thinking about how you're going to manage your digital wealth moving forward. It is not about to just be, I'm going to hodl, become successful long-term, because people like myself who are thinking about these strategies, and many others like Aqua and the Wealth 28 Club and everybody inside the CyberX community, we're going to be constantly stacking yield, learning about these looping strategies, maximizing our yield potential, and just stacking up those bags, while of course mitigating that risk by being diversified in each asset.
Facts, bro. And being aligned with the compliant protocols, I don't know what that's going to look like once regs come. Like, if they're going to drop the hammer so hard that these non-compliant platforms are just really not going to be able to exist, or is there still going to be like some wild west shit going on in the background, even though regs and compliance are here? It's going to be interesting.
I think that there's always going to be bad actors, because if you look at the traditional financial system today, there's still bad actors that wiggle their way through misalignment with regulation, and eventually they get caught and they go bust, and that will always exist. But what I think will happen with the existing DeFi protocols that aren't KYC compliant or don't have, regulatory, capabilities baked in, is they will have a window after regulatory clarity comes and standards are set in place. They'll have a window to adjust and adhere to those regulations if they want to remain competitive, if they want to remain adaptive to the evolving ecosystem. They'll have some time to adjust their platform, integrate KYC, AML compliance features, to kind of adapt as the environment changes. If that makes sense.
No, it does. It definitely does.
Like, I don't think it's just going to be like one day a regulation is going to drop and then these DeFi protocols are just going to disappear. No, a regulation will drop and then the founders of that DeFi protocol will have to make a decision whether or not they want to comply with the standards, whether or not they want to continue to, participate in illicit finance, or whether or not they want to just, drop their DeFi protocol and drop their project and tell everybody, hey, look, we're going to shut this down because we're not willing to comply or whatever. I don't know. But that is why, before all of this, what are we doing in the Wealth 28 Club? We're focusing our attention now on compliant ecosystems, compliant DeFi protocols, Soil being one of them. Soil right now is one of the only compliant DeFi protocols offering, for the first time ever, a high-end single-digit yield on XRP. And they just went live on this yesterday, May 14th. So I want Aqua to go ahead and bring up his screen. It says here in an announcement from Soil, we are live, 5% fixed APR on XRP all the way through June, native on the XRPL, no bridges, no wrapping, institutional grade XRP yield is here. Now, I do want to ask you, Aqua, what's your opinion on the competitiveness of what you kind of mentioned earlier? How, do you think that, I know me personally, I'm not going to want a wrapped version of XRP. I'm not going to want to have to bridge it or do anything like that. I want it straight through, and native on the XRPL, and I want to earn yield in XRP. No wrap version where I have to go and I have to swap wrapped XRP for the native XRP. This is phenomenal. I wonder if there's going to be a competitive landscape and what this kind of means for, like, for example, the Flare network and the Flare ecosystem where it's bridges and wrapping and all this stuff. What's your take on that, if anything at all?
Bro, I feel like Soil is here to major box out all these other protocols that involve bridges. I mean, bridges are where the main hacks have happened in crypto since the beginning of bridges. So the fact that Soil is native and they're honing in, no bridges, no wrapping, institutional grade XRP yield is here. Like, just for me, my preference is going to be Soil at the moment, or any other protocol that's going to allow me to get my XRP working for me natively and not have to send it here and wrap it in this vault and then take it over here and now I can finally use it. There's just too much going on with that whole process. And I don't know, maybe in the future Flare can figure something out where, they're not using bridges, potentially. Who knows? I'm not involved in their closed door meetings, but right now I don't feel safe using bridges, to be real with you. So
Yeah, bridges or wrap versions, honest to God, I stay away from all that stuff.
Yeah.
Yeah, I mean, and this is crazy, man. If they could maintain an APR of, especially a fixed APR, like it says, right, where you jump into this vault and the APR doesn't fluctuate like it does on a lending protocol, it's fixed. You're going to be guaranteed that 5% for that allotted amount of time that you're allocated to the vault. Think about the numbers, guys and gals, in the future, because these are all futuristic strategies. These things are happening now and they're very risky. And I get that, right? People don't want to dabble into them because they don't want to lose their XRP. But nonetheless, you should be learning about these protocols. You should be testing them out with test amounts, 1 to 2, 3 XRP deposited, just to play around with the mechanics of the ecosystem and actually entering into the vault, withdrawing out of the vault, and just seeing what that process of connecting a wallet looks like with these small micro amounts, so you get the consistency. Because think about it, if you do believe in a high-end XRP price, XRP goes to $100, $200, $300, $400, it's sitting at $1,000 one day, and you were able to accumulate 10,000 XRP as just a small bag example. You're looking at what is that? A couple $1 million, right? 5% on a couple $1 million and you're retired.
Yeah. Facts, bro. Facts. Yeah. 5% on 10 million is some serious money. I mean, even 5% on 5 million, half of that is some serious money. So.
And if you look at the strategies of all the wealthy people in the world, any wealthy person will tell you, even the high net worth people in my circle tell me, look, once you surpass $5 million, making money is easy, because all you have to do is take that $5 million and earn 3% on it per year.
Yeah.
And you're making multiple 6 figures.
In
passive income.
5% on 5 million is 250,000. It's $250,000 a year.
A year.
Yeah.
Divided by 12 is a couple stacks per month.
Yeah. 100. And the great thing is it's an asset that's going to continue to go up in value, So
we are entering into this era where influencers that keep shilling people these high-end price predictions and getting people to believe that selling their utility assets for fiat currency are going to eventually fade away. And people like myself and Akko, who have constantly been trying to teach people strategy on maintaining digital wealth over the long term, percentages, yield looping, lending, borrowing, day trading, and accumulating wealth, are going to be the ones who survive long term. Because there is going to be a day, very unfortunate to say this, that we are going to see some massive utility price appreciation across a multitude of different assets. Who knows which ones they're going to be? We can hope that it's XRP and XLM and HBAR and Quant and Canton and XDC and all these utility assets. We can hope, but who knows which ones it's going to be? But the ones that it is, and the people that sell those assets for fiat, they're going to get trapped in this. It's kind of sad. It's really sad.
Yeah. You're going to have a 2 to 3 year luxury lifestyle that's going to last you 2 to 3 years. And then, because you didn't put those assets to work to create cash flow, the fancy lifestyle will only last you, so long. So.
It's like understanding what you're really investing in, and that it's not just for price appreciation, it's for asset mobility, asset utilization. And like Sandy Call said, really getting every asset that you have put to work for you, even the cash that you have, right? Let's say, for example, you do want to sell for fiat. You don't have to sell. You can lend out your XRP, borrow up to 60 to 70% of that valuation against it, and then split that bag in half in stable coins, go and spend whatever it is that you want to spend, and then loop the other half for additional yield to pay back your loan on XRP to get your original XRP back so that you never have to sell it.
Yeah, bro.
Actually, as a matter of fact, I'm in the process right now. I've been documenting the whole entire thing. I lent out on the Metallicus ecosystem. I put myself in debt, so I borrowed against my assets, and I'm right now in the process of paying back my loan with my yield. And so I lent out, I think it was like 15 grand, and I borrowed 8 grand against it, or I think at the time it was maybe $9,500. And with the yield that I'm earning on the assets that I borrowed, because I put them to work, bro, the only amount that I have to pay back on my loan now is at 8 grand. So I've already paid back $1,500 of my borrowed principal with just yield.
Yeah, bro. These are the new financial weapons, that the ones that are aligned and educated on what these weapons can do. Man, a lot of us gonna create some generational wealth and turn on some faucets that can be turned on for quite some time,
Do you want to share your screen and go over the Soil platform real quick and some of the things that we discussed in yesterday's private Zoom call and kind of just
Let me
things
share.
to pay attention to?
Yeah. You see my screen?
Yes.
Is it my entire screen or is it just the? Yeah, okay.
Looks
cool.
like it's just the Soil.
Yeah. So, yeah, here it is. I feel like Soil really did a good job making things very simple to the eye to understand, what you're looking at. So many protocols in DeFi that make you kind of go cross-eyed and shit. But shout out to these guys making it very, very simple. So as you guys can see here, I'm in a couple of the vaults, actually 3 of the vaults actually now. I'm in the Liquid Vault, I'm in the Credit Plus Vault, and I'm now in the XRP Vault. And as you guys can see here, these are just test amounts. This is what, $99, earning 5%. This is my accrued yield since the lifetime I've deployed, which is 92 cents. And then same thing here on this $99 in the Credit Plus Vault. My accrued interest is $1.54 in RLUSD. Now, where I got really excited was just 2 days ago, or yesterday, Thursday, when the XRP Vault finally launched. It was supposed to launch the end of last month, but for whatever reason, it got pushed out. And here we are, though, right? So what the most exciting part about this, though, is that your yield is going to get paid in XRP. So I don't have any accrued yield just yet. I want to say this thing should update in the next couple hours. In the next couple hours, it will be over 24 hours that I've been in this vault testing it out. And so, yeah, just giving you guys all a heads up, your accrued yield is not, it's not accruing. I mean, it's accruing in real time, but it's not going to update and reflect the actual yield that you've earned in real time. It's going to update every 24 hours. So yeah, a couple hours, this will look different. But basically, I'm excited about this because it's just like, and even though I'm not going to be deploying every single XRP in my bag onto this platform, I'm going to sprinkle a little bit here, sprinkle a little bit there, have some XRP in this wallet, have some XRP in that wallet. So you're not having all your eggs in one basket. But I feel like this is major. Like if any of these Moon Boy numbers come to fruition for XRP, $100, $500, $1,000, whenever that day comes, it's going to feel great to, have a portfolio that was earning you more XRP, that your XRP, some of your XRP was earning you more XRP. You know what I mean? And it's just like to have more XRP because of this DeFi tool. This is major. Like if you go back in time and it's just like all these people who owned Bitcoin at $1 or Ethereum at 75 cents or 50 cents. And if they had the option to put that to work back in the days, to where they could have more Ethereum, more Bitcoin. And then fast forward to where we're at today, you know, this is a wise move in my opinion, right? It's not financial advice. I would never say deploy your whole bag. Yeah, pretty much, you know, I'll tell you guys this too. Your yield, you can't touch your yield until you exit the vault. So that's probably the one downside I would say to this passive income machine. To get the actual accrued yield, you would have to exit the vault, gather your yield, and then you could probably redeploy into the vault. But I feel like there's going to be some risk with that because these vaults have caps as well, right? So something to possibly ask these guys in the future, if like, hey, you know, can you guys at least unlock or give us the ability to have access to the accrued yield, and the principal amount can still stay locked up for, you know, forever. But at least let me get the accrued yield so I can actually create a passive income stream, either daily or weekly, whatever you decide. You know, that's the beautiful part about DeFi. You get to make your own rules. But when you click on these vaults, right, just giving you guys a heads up, if you guys do decide to deploy into these, into the XRP vault, just know that to exit your XRP, you do need to give them a 40-day notice. So basically, I would see, I haven't gone through it yet. I am going to put another test amount and then exit it to see what that whole process is like. But if I could just guess based on, you know, other experiences that I have that have similar criteria, I would say you basically probably come in, unlock your vault, and then there's some sort of countdown that's counting down the 40 days. And then by the last day, you know, you can exit the vault and then do whatever you want. But again, once you exit the vault, I feel like you're going to be risking potentially not being able to get back into the vault because, again, these vaults have caps. These vaults are not unlimited amounts, right? But yeah, so, you know, I don't know if you have any questions. I have said a lot, but yeah, I don't know if you have any questions or that you feel like you should ask for, you know, the viewers to listen, Cypress. But I feel like that's the one thing that I want to ask these guys over at Soil, and hopefully they can change this, because I mean, it even says it here too, designed for long-term XRP holders seeking passive income. So yeah.
No, but maybe we can get them on a podcast in the future, as you said that you were in contact with them, and we can ask them. I wrote down 3 things. So just maybe even we could go through to elaborate some more questions if we could get them on a podcast. But 3, real-time yield accrual visual. So like what I really like about the Metallicus ecosystem is in real time, if you really wanted to sit there and watch your bag increase, you can, because once you deploy on the lending protocol on loan, you instantly start to see how much yield you're accruing right there in real time. And it shows you, like, even if it's a small sliver of a penny, you can actually see your figure going up in value. That's something that I like. The second thing I wrote down is if they could, or explain why there isn't daily yield compounding for withdrawal. So like why, if you have $1 million in the RLUSD vault earning, what is it, 8%, that's 80 grand a year. But it would be even crazier if every 24 hours, like how on XPR staking, for example, every 24 hours, you can take out your yield from your stake, and you can compound that. That would be an amazing feature. Even if you couldn't put that back into the vault, just having the ability to access that daily yield would be powerful, because what you could do with that daily yield, you could pay bills with it, you could take it, you could loop it into more DeFi strategies. So maybe we ask them if that's going to be a feature that they're going to look to improve in the future, or add. And then the last thing that you just mentioned was that countdown for exit. We're assuming that they have a countdown for exit. I'm assuming you'll find that out to be the case if they have that. But if they don't, once you go through that process, adding that visual for kind of just like, it's almost like a what's that word I'm looking for? It like calms you, like how much you have left on your withdrawal before it deposits back into your wallet, which would be a cool feature.
Yeah, no, definitely. Most definitely.
And then I would definitely like for them, if we could get them on a podcast, to explain more in detail about how they adhere to regulatory compliance. Because if you go to their homepage, they mention that they're the only in all caps, regulated DeFi protocol on the XRPL.
Yeah.
You know,
Yeah.
so I would like for them to touch on that, and then maybe go into a little bit more detail on how and what they've seen in terms of other protocols, and maybe why they're not compliant, and if they see other protocols that are on the XRPL right now becoming compliant, or what that process was like for them.
Yeah. And for the people who are asking in the comments what wallet I'm using to connect, I'm using the Zayman wallet. The Zayman wallet has been super smooth for me with accessing soil and moving and grooving on it. So
Yeah. Yeah. The only other thing I was going to mention on is just consider this, right? Even if you're not going to deploy on these protocols right now because you're still in this kind of like either learning phase, or you still think DeFi is too risky, that's great. But think about yourself, or think about people like Aqua said that invested in Bitcoin back when it was, I don't know, less than $1,000, let's just say. And when it went to $10,000, or I'll use myself as an example, I sold most of my Bitcoin. I had over 7 Bitcoins. And when it went to like 31K, I remember I sold it because I thought, oh, this is it, 31K Bitcoin. And I made a big chunk of change off that compared to where I had bought it at. I bought most of my Bitcoins when they were like around 2,000 to 3,000 bucks. So it going to 30K was a big jump for me. But at the time, there was obviously, of course, no lending and borrowing protocols for Bitcoin. Now, fast forward to today, had there would have been, I would have loved to hold on to my Bitcoin and just lend it out and borrow against it and still have that like 7.5 Bitcoin that I had at the time, instead of having sold it all for 30K. Now imagine that I know for a fact I'm not about to make that same mistake with all the XRP I have. There's no way in heck, if XRP goes to $100, I'm selling it for fiat. If I need cash, I'm just going to lend it out, borrow up to 70% against it, and then hold that XRP for the long term in case it goes to $1,000.
shit, I would say in case, if it goes to 100, eventually it probably will go to 1,000. So and we want to hang on to these bad boys, you feel me?
So I just, there's a mindset shift happening. It's not just that the masses are adopting crypto, but it's also that the people that are already having their foot in crypto over the past couple of years also need to have a mindset shift with what's going on in the digital asset space. We're entering into an era of tokenization where like real estate, gold, art, all these things are coming on chain. Previously uninvestable asset classes that were, unavailable to the average retail investor with a, let's say net worth of less than 6 figures, wasn't able to buy sophisticated art pieces or invest in, gold because it's, 4,000 some odd dollars per ounce. Well, now you're able to buy micro amounts of gold and then earn yield. So if you only have $50, there's platforms out there right now where you can buy $50 worth of gold and you can go and earn 10% on that $50 because it's tokenized. There's places right now where you can go and you can invest in tokenized real estate. Maybe you will never have the proper credit credentials or the income to get approved by a bank to get a loan to invest in real estate. Well, right now, if you work at McDonald's, you can go and you can take a sliver of your paycheck. Maybe it's $100 extra per week that you want to invest in a piece of real estate on a platform like Lofty, and you can earn 8% on a freaking real estate property that's not even yours, but it's just the property that you like, that you see is performing well, and you want to put that extra $100 to work to earn you some extra income. You can, and that takes a mindset shift. It takes a knowledge curve, and those things is what's happening right now. And so that's why we built the Wealth 28 Club. That's what we talk about all the time in the CyberX community. And it will behoove you guys to really start to shift that mindset from price appreciation, bull run, sell it all, become wealthy, to keep your wealth, hone into your digital assets, get everything working for you that's managed in a wallet, ran by 2 or 3 AI agents in the future that deposit passive income back into your spending digital wallet under your business LLC, so you don't get taxed. Like there's so many strategies that if you're not locked in right now, oh man.
Yeah, bro, I would ask you too this, bro, like, would you say take away that you do day trading, right? Just say that you do DeFi and that's it. Would you say your portfolio would be more today with participating in DeFi as opposed to just hodling, watching YouTube videos, paying attention to different posts on X? Which portfolio would be more? Would it be your portfolio of just watching stuff, consuming stuff, and never putting your assets to work? Or would your portfolio be worth more by
bro.
participating in DeFi?
That's literally the easiest answer ever. Like, honest to God, I'm super stoked about this next upturn in the market because this entire downturn, bro, the number of assets that I have literally doubled because of DeFi. Like, especially in the Metallicus ecosystem right now, y'all, oh my God, I have HBAR working for me, XLM working for me, XRP working for me, XPR working for me, Metal working for me. Like, the amount of assets that I've accumulated, not the value, the amount, the number of XLMs, the number of HBARs, the number of XRPs, the number of XPRs has gone up significantly. So when price appreciates again in value, my block space, the share of block space that I have has increased. And so the value of my portfolio is going to freaking surpass where it was at when the market was at its last high valuation at 4.27 trillion or whatever it was. Bro, my portfolio was in the multiple millions. It's going to be ridiculous this next upturn.
Yeah, it is, bro. Yeah, it is. Let's go, bro. Let's go.
You know, so I'm, you know, that's, and you know, to each his own. My risk tolerance is a bit higher because I am a day trader, and so it's a little bit easier to make income back if I lose money. You know, but still, nonetheless, to answer your question straight to the point, bro. Yeah, I mean, the person that's earning yield on their assets and compounding that is obviously, of course, going to outperform the person that doesn't.
Yeah,
that's simple math. Yeah.
Well, I agree, bro. Even if it's a little bit too.
Even if it's a little bit. Even
Yeah.
if it's, you know, you're earning an extra 2 or 3 XRP per week.
I'll take it. Especially, like I'm saying, like if XRP was to go to $100, $1,000, like you mean to tell me you wouldn't want a couple extra XRP on a monthly basis until we get to that destination? Like, come on.
People have the innate ability to think big long term, but not think big in the now. So, you know, they'll go over to a platform like the Metallicus ecosystem and the loan protocol and be like, oh, I'm only earning 0.45% on my XRP. It's not really worth it.
Yeah.
Okay, I'll take that 0.45 while we're sitting here doing nothing in this freaking nasty consolidation where we're just going from $1.50 to $1.27 to $1.50 to $1.27, $1.50, right? And the whole time, every single week, I'm making an extra 10 XRP. So finally, when that joint breaks back out to $3 and some odd cents, the extra 10 XRP becomes an extra $30 in the future. You know?
Yeah, no, that's facts. That's facts. Bro, and you know what? I would say this too to everybody listening. I think we shared this podcast a while back, but one of the creators or the founders of this platform, Soil, basically said any platform out there offering you yield over 10% on your XRP
is a scam.
No bueno. It's a scam. So I know there's some protocols or you can't even call them protocols, just scam platforms that are out there that are saying some pretty crazy numbers that they can give you on your XRP. I would say be very wary out there. Like the no KYC shit out there, I wouldn't be fucking with none of that right now. That's just my honest speculation opinion, not financial advice. You guys are going to do what you want, but the ones that are saying, 20, 30, 40% on your XRP right now, stay far away from that shit. Stay far away from it.
Couldn't agree more.
Yeah, because right now it's crunch time, bro. And I feel like we're seeing an uptick of like what they're trying to call it DeFi, but these are not DeFi platforms. These are scam platforms that are designed to take your digital assets. So just be very careful out there to everybody who's listening. you get excited listening to a podcast like ours, and then you come across a platform that's saying, hey, you can get 25% on your XRP, you might feel some type of way. But what I'm saying is just be careful. Anything over 10%, that's a red flag. No KYC, red flag. If you can't find any, background on the founders, and maybe if Ripple is not backing them as well, because Ripple came out and backed Soil. So, if it's not doing all that, it's more than likely a scam. So just be very careful out there to everybody.
100% do your due diligence. I want to touch on Metallicus real fast before we jump off. We have to, because Marshall Hayner said some insanely bullish stuff this week. In this post here, he said, "Are you ready for full clarity? There is $21 trillion in deposits across credit unions and banks within the United States. The total crypto market cap is currently $2.7 trillion. All dollars, all securities, and financial assets can and will be tokenized. The math is simple." And you put this picture of the dam underneath, right? I had to post the video of the Aquaman underneath, chilling in the waterfall, bro.
Let's go.
But it just goes hand in hand with what this guy here says from 3IQ, who is a large digital asset manager in the space. And he specifically says that the floodgates are
one of the problems of the industry.
He specifically says that the floodgates are opening. So I thought that this just went hand in hand with the post that you had highlighted there. Take a second and listen.
Is that there's so many avenues of potentiality that people get a little bit like the deer in the headlights. They get confused as to what they need to focus on. Secondly, we also, we announced recently, and I think it's pertinent to, I don't want to do a sales pitch, but I do want to point it out because it's pertinent to the point that you made, Francesco, about the movement of institutions. We've just signed an agreement to manage some money with a sovereign backed out of the Middle East, and for them to have gone through to make that decision was a very painstaking due diligence process. And the fact that they are pulling the trigger, I think, is testimony to that the floodgates are opening now. So when a sovereign does something in digital and they're taking huge reputational risk, they're taking huge investment risk, they need to feel comfortable in the due diligence process. And the fact that they are pulling the trigger, I think, is testimony to that the floodgates are opening now. So when a sovereign does something in digital and they're taking huge reputational risk, they're taking huge investment.
So we talking actions now, not even words that are saying this, bro. Actions being taken. The floodgates have opened.
I mean, time is running out. And I mean, nobody has a crystal ball on when all of this is really going to start to ramp up. But I could tell you one thing, is that I do not want to be the retail participant in 5 years from now that gets in after the institutions and looks back and I was like, oh, I had the opportunity to invest, but I didn't because I was scared. Like, I would rather invest all my money, take the risk of possibly losing all the money that I've invested, considering that I've assessed my risk and the amount of money that I have in, and lose it and say I tried, rather than look back in 5 years from now and see that everything's at a high valuation and be like, oh, I had the opportunity.
Yeah, fuck all that. That ain't gonna be me, man. Let's roll the dice.
Let's roll the dice. Last post, considering that Marshall Hayner mentioned 21 trillion in deposits across credit unions, and they just announced this. Cross-state Metallicus yesterday launched a pilot program with 50 credit unions to explore stablecoins and digital assets. And we know on the back end that there are over 27 trust lines right now for stablecoins already embedded into the XPR network. Correct?
That is correct, bro. That is correct. I can share the screen to share with everybody. Give them a little glimpse if you want.
I'll read this while you get that pulled up. Cross State
Yeah.
Credit Union Association and Metallicus today announced the launch of its Innovation Program 2.0, designed to help credit unions better evaluate stablecoins, digital identity, blockchain infra, and faster payments through executive education, sandbox testing, and strategic collaboration. The initiative launches with an initial cohort. It's not the end, it's just the initial of 50 participating credit unions across New Jersey and Pennsylvania, creating one of the largest coordinated stablecoin and blockchain initiatives among regional credit union associations. As credit unions continue evaluating ways to modernize payment, strengthen fraud prevention, and prepare for emerging digital finance infrastructure, initiatives focused on blockchain, stablecoins, and digital identity are gaining increased attention across the industry. Through this partnership, cross-state members credit unions will gain direct access to tools and resources designed to help them evaluate emerging tech without operational disruption, core integration requirements, or member-facing risks. So I thought that was huge. I'll let you share your screen quick, bro, and then I just want to have your take because we haven't touched on it together. That Investify stuff that I found this, or not that I found this week, that Junior sent to me that I had posted about this week. I got to give credit where credit's due.
That's juicy. We got to definitely go over that. All right, hold on. Here's my screen. So yeah, this is the XPR network block explorer. Pretty much. So last year, St. Cloud Credit Union announced their stablecoin, right? Here's the trust line for that, CLD USD. And alongside this trust line of St. Cloud's announcement, we have over 25 other credit union trust lines that have not yet been announced. And here are their trust lines. And I've went through, I mean, if you're part of the Wealth 28 community, I've went through all the different artwork on these trust lines and have basically found that these are real credit unions, and these are their trust lines. So yeah, without saying too much more, because these guys have not announced it yet, so we don't want to, have anything going too viral until these guys have made the announcement. But if you know how to search the block explorer on XPR network. This is what some of the sophisticated researchers have found. So yeah, it's going to be exciting.
So it's literally a bunch of trust lines sitting there waiting to go live, collectively speaking, is what you're saying.
Literally, bro. Literally.
And you got real-time announcements like this, where you got Metallicus announcing cohort programs with 50 credit unions. And the crazy part is you got this announcement with 50 credit unions and there's only 27 trust lines. So imagine what this looks like in
hundreds. There's going to be hundreds, if not thousands, very soon, I would imagine. And it'll all be activated too. So, this and seeing this from Investify, so if you come to the Investify, what Junior had shared with me in the Discord this past week, you come to Investify, and I made a whole video breakdown, so I won't beat a dead horse. Long story short, Investify at a conference last year in November said that they'd be willing, once regulatory clarity is enacted, to give access to all of their credit union clients to Metallicus's coin. And if you we'll go over and look real fast at all their announcements. Just in 2026 alone, they have partnered with almost every single major credit union to unlock the ability for their credit union to invest directly from their mobile app, their mobile banking app, into digital assets, right? And if you come here to the Investify website, and let me just remember the loophole. I think you go to products, so we'll go to the products page. Yep, and you come down here, and then you click on the stablecoin offering. It'll take you to this next page. Then you come and you scroll right down here, and look at what it says. Supported stablecoins, RLUSD coming soon. USDC already live. USDT already live. Metallicus, Metal blockchain, Metal token committed right there, bro. Damn.
Yeah,
Yo,
man.
and I just keep thinking too, like, when XPR, I think the all-time high is like 10 cents. When the markets finally kick off, this was an all-in position. You know, there wasn't 25 trust lines
Mhm.
on the Block Explorer for credit unions and banks. There wasn't, you know, another 50 in the pipeline that were going to be possibly created. Like, we're literally entering a time that we've never been in before, and it's just like we have low expectations too. I feel like that's the best thing to do, you know, because we're all like, damn, all we really want is to go back to all-time highs. But anybody thinking about this logically, like, come on now, we're going to be surpassing all-time highs eventually.
To be even crazier, bro, to be even crazier, I want to know what the heck caused that wick on Metal blockchain up to $42.
Yeah, bro. You should show that shit too, because I feel like not a lot of people know that Metal has been that high. And I thought it was 55, or am I tripping?
It's like in the 40s to 50 range. I don't know the exact number that it touched, but yeah, there was a point in time in 2022 when Metal blockchain wicked up in one candlestick to above $40, and now it's trading at what, 15 cents? Come on now. This is the last thing I wanted to share. It's just that Investify, right? And they have literally all you can't ignore this. If you're a naysayer at this point after what I'm showing people, then I mean, I just don't know what else to say, but they literally have the Metal token as an investable product for their clients coming soon on their platform. And look at all the announcements they've had in 2026 alone, starting down here. January 2026, they partnered with Minnesota Federal Credit Union to offer stocks and crypto directly from their checking accounts. Same thing here. Oklahoma's Base Truity Credit Union offering crypto directly from their checking accounts. Investify. BitGo right here, enabling clients in all 50 states to invest in digital assets. Look at this. Cryptocurrency directly from their checking accounts. Day Air Credit Union investing directly from their credit account or their checking account. February 2026. Heartland Credit Union. Look at this, bro. It keeps going. March 2026. Sunset Bank. Online banking offering account holders with integral digital asset investing and financial education. ETFs and cryptocurrencies accessing directly from their online banking platform, Freedom Credit Bank. Penn Credit, accessing digital assets directly from their online bank. Bro,
there are so many more trust lines that are about to get created. Because all of this artwork, I haven't seen any of this artwork before from any of these credit unions on the trust lines that are currently there. Damn.
So we are literally at ground zero before, like these people are saying, the floodgates open. And what this looks like, I don't think that anybody actually has a sense of what's about to unfold. We can sit here and fathom, but the best thing to do, in my personal opinion, as we wrap this up, is again to participate in risk-assessed DeFi strategies, where, like I mentioned at the very onset of this call, you have a long-term bag that you don't touch. That's your old shit bag that stays in cold storage that you don't touch just in case things go wrong. And then you have a certain allocation, at least me, not financial advice. I know I have a certain amount allocated in different digital assets that I'm participating in DeFi with. So I'll have some XRP that I'm lending out, borrowing against, practicing those DeFi strategies, earning yield. I have XRP that I'll be sticking in some vaults, earning 5%. I have some XLM that I'm participating in DeFi strategies with, HBAR, so on and so forth. And I'm just accumulating more, stacking, waiting for all these high-end price predictions to come into fruition. And even if they don't, great, so be it, because I will still be able to lend and borrow against the assets and the value of my wealth that I do have strategically without having to rely on the traditional financial system. So it's a win-win regardless.
Yeah, I totally agree with that, bro.
So that was it for today. I thought this was a great call, bro. It sucks that they scrubbed this one video from the internet. I think that's so crazy, bro. They scrubbed this from the internet.
Yeah, that is crazy.
I can't believe they took it down.
Yeah. The symbolism though too on that video is kind of crazy, bro. Not gonna lie.
On the Bermuda digital finance farm.
With the triangle and like I don't know if it's a sun or what, but there's some shit going on that little artwork.
It really sucks because I had some really juicy videos from that, but I should have recorded them all. You know what's crazy is something was telling me. I literally remember saying this to myself. I was working out the other day and I was listening to it because it's an 8-hour live stream that they did. And
Okay.
I remember hearing some of the stuff that the people were saying, and I'm like, yo, this is the most bullish conference I've ever heard. Like when the guy from, I don't remember what financial institution he came from, but he literally said to the crowd, he said, listen, I need everybody to listen to me. In the next 12 to 18 months, we are going to see trillions of dollars come on chain.
Oh my God. Oh my God.
And like, I wrote so many good notes down. I'm just surprised they took the video down. I wonder why, but whatever. It is what it is.
You just told us why, bro. They gave us a timeline.
You know,
trillions coming in the next 12 to 18 months. Damn.
So, but yeah, blessings to everybody on the call. You know, everybody enjoy your weekend, enjoy your Friday. You know, be productive. Don't just waste your weekend if you work that 9 to 5 grind. You know, enjoy your time off, but also find some time for yourself to be productive and prepare for the week ahead. So that way you can align yourself with your goals, align yourself with some momentum to propel yourself through the next week. If you're in the CyberX Wealth 28 or CyberX Discord community, shout out to you for tapping in with us on this call. We'll see you guys inside the Discord. If you're not, consider joining us inside the private community. There's so many venues and avenues of approach for you to just propel yourself forward in our community. Our community is winning big time. I'm talking about huge. Our members are prospering in ways that some people can't even fathom. You could be one of those people. Head over to cyberxtrading.com, tap in with us. We'd love to have you guys and gals on the team. With that being said, many blessings to you all. Aqua, that's all I got, bro.
Yep. Much love, everybody. My bad. My daughter literally right at the buzzer over here. She's having that issue right now.
All right, man. You guys take it easy.
All right. Much love.